Do we actually need a rate cut? Historically, mortgage rates have been all over the map. In the 1980s, rates peaked above 16%. In the 2000s, they averaged around 6%. In 2021, they hit historic lows around 3%. Today, sitting in the mid 6% range, we're not at crisis highs, but we're certainly far from pandemic lows. So the question is, are we just spoiled by ultra cheap money from the last decade? Or does the economy truly need the relief of lower rates? Would a rate cut actually make homes more affordable or just push prices even higher?
Melissa, this is the biggest one-day drop in rates since August of last year. The average on the 30-year fix dropped 16 basis points this morning to 6.29%, that according to Mortgage News Daily, and that is the lowest rate since October 3rd of last year. So we're finally breaking out of this high 6% range that it's been in for many months. Mortgage News Daily's Matt Graham also says many lenders are priced better than this at rates of 6.125%, and many lenders will be quoting in the high fives today. So it's a major difference from May when that rate went over 7%. So let's do some math here. If you're buying a $450,000 home, which is around the national median, using a 30-year fix with 20% down and not including taxes or insurance, your monthly payment at 7% would be $2,395. Today, it would be $2,226. That is a difference of $169 per month. Now, that might not sound like a ton, but it's definitely making the homebuilder stocks happy. Names like Lennar, D.R. Horton, and Pulte, those first two up over 3% on the day. And how about the home building ETF, ITB? It's been running hot for the last month as rates move slowly lower. It's up close to 13% now over the past month. The big question is, will this be enough to really get home buyers back in the market? Rates, as I said, have been falling all month slowly, and mortgage applications to buy a home, they have not really responded. Some say you got to get a 5 handle on that rate to really make a difference given how high home prices still are.
So mortgage rates are slipping into the mid 6% range, approaching levels not seen since last year. This as markets begin to price in potential Federal Reserve easing. The average U.S. 30-year fixed mortgage rate stands at approximately 6.55%. The average refinance rate is about 6.71%. This reflects a broader downward trend over recent weeks, continuing into early September. Compared to recent highs, this rate drop offers some relief. Borrowers might save around $1,600 annually, or about $133 per month on a typical mortgage payment. However, buyers remain cautious. Persistent high home prices and historically elevated mortgage rates are keeping many hesitant to purchase. Market sentiment has shifted dramatically. The debate is no longer if the Fed will ease interest rates, but how quickly it will act. A recent slowdown in the job market has increased expectations for a rate cut at the upcoming September Fed meeting. Mortgage rates are hovering in the mid 6% range, but is that enough to spur home buying? And most importantly, do we need to cut rates, considering our historical levels are closer to 8%? We also have to consider time periods and circumstance. 3% was necessary following the pandemic, and then there are times when inflation is running hot and interest rates must remain high. This only underscores why the Federal Reserve's independence is significant. Let me know your thoughts.